Here are the steps you need to follow right now. The first thing you need to do is you need to start paying your bills. And I'm talking about past and present. So when we have a conversation about paying your bills, I'm not asking you just to pay your bills, your current bills. You got to go back to the past and really make sure that you have a conversation with your lenders or your credit card issuers so that you can have some kind of agreement. This is really important, okay? When I'm talking about paying your bills on time, I'm talking about paying all your bills on time every single month. If you are really serious about trying to quickly rebuild credit after some kind of difficult past, it's really important. If you have any past due accounts, bring them current and make on-time payments going forward. And the thing here is that if you are trying to sort of catch up on your bills, consider setting up automatic payments or payment reminders to help ensure that you're never late again. The thing is, stuff happens. People go through stuff. You have life, you have 9 to 5, family, social life, and what have you. And it's kind of very, sometimes it can be complicated to sort of catch up on everything, to remember everything, So what I want you to do is I want you to have some kind of automatic routine in place so you are making sure that you're on top of all your bills or your financial obligations, okay? And the thing here is that, and I want to go back to past due bills. This is important. Never assume simply because it happens in the past, you're thinking, well, they probably send my ass to collections anyway, so I'm not going to pay the bills. Well, this is really bad. If you are trying to quickly rebuild credit from your very messy FICO, you need to address the issue of past due bills. If you do not address the exact cause of your bad credit, the damage is likely to worsen the longer it goes untreated. Think about that. Let me give you an example. If you have missed a few credit card payments, repaying at least the minimum amount needed to change your account's status from, let's say, delinquent to paid on your credit reports will prevent your score from falling further. And the same is true for collection accounts and other derogatory remarks, okay, at least to a certain extent. So you have to really think about that. But I want to go back to the whole thing about paying your bills on time, okay? This is very important. I don't care how you do it. If you have to use a budget, if you have to use, let's say, automatic transfers from your bank account, if you have to have reminders, whatever you have to do, do it. And I want to talk, this is the next thing I want to talk to you, and this is still in the first thing you need to do. Get help with debt. See, the whole thing is sometimes you might think, well, I can do this by myself. I can probably sort of fix issues myself. Boy. Sometimes it's complicated. You can try, you can even be financially literate. It's not about going to school. It's not about having a PhD, having a master's degree, having a bachelor's degree. Been there, done that. Sometimes you need help because if you have a convolution, if you have an aggregation of bills, a constellation of bills, and you just I'm overwhelmed. And sometimes it's kind of cool to have external help. So when we talk about, so if you are struggling to pay your debts, you have a few options for help, including credit counseling. So a certified credit counselor can help you create a financial plan to better manage your debt, okay? And so the thing here is that do not actually confuse credit counseling with debt management. I'll talk about debt management later on, but it's very important to say that if you are really interested in this topic of credit counseling, just drop us a comment below and we'll certainly send you a link to the best credit counseling organization in your state. Okay, there are a lot of organizations in your state and most of them are free. You want to go for free because right now you're having financial problems. You don't want to spend extra cash on a sort of lucrative, for-profit credit counseling institution. You don't want that. So you have credit counseling. You also have debt management. So a debt management plan helps you eliminate your debt. So, but the thing here is that you have to deposit money each month with a credit counselor who will then use the money to pay your unsecured bills according to a payment schedule. The counselor works out with you and your creditor. So the counselor basically is like the middleman, the liaison between your lenders and credit card issuers on one end and you, the borrower, on the other hand. Okay, so that's the second thing. You need to understand that creditors may agree to lower interest rates or waive certain fees, but they're not obligated to do so. Okay, they're doing you a favor. So, and then you also have a debt consolidation. So the thing is, if you are struggling with many high interest unsecured debts, multiple credit card balances, a debt consolidation loan can help you reduce the amount of interest you pay each month. Okay, and so get help with that. Credit counseling, debt management, debt consolidation. The second thing you need to do, so the first thing, if you want to quickly rebuild credit, if your FICO score is messy, you need to pay your bills, past and present. Second thing you need to do is to think about your credit utilization ratio. By the way, welcome back to the show. Really appreciate having you here. We are a family, and grandpa, grandma, mom, dad, uncle, nephew, aunt, niece, everybody, bro, sis, it's just wonderful to have you here. And so when I'm talking about your credit utilization ratio, I'm talking about something that's very important. The thing here is that a lender is looking at your credit utilization ratio and saying, hey, listen, if this person has a high CUR, this person must be desperate. They're looking for money. Okay. And the thing is that, I mean, you know the percentage. I've said this before. All experts, including our team members, say that you want to be around 30% or less. In other words, your CUR, to be healthy, to be considered healthy, should be around 30%. And ideally for us, we tell our clients, all our clients, business clients, individual clients, hey, listen, you want to be around 15%, 10%. Single digits is really, really great because it is a hallmark of financial responsibility, of financial health. And the thing is, when we talk about credit utilization ratio, don't get it twisted though. It's basically something very simple. This metric compares the total amount of credit you have available based on credit card limits to how much of your available credit you are actually using. In other words, your balance. Okay. And CUR does not apply only to credit cards. It also applies to revolving lines of credit. So if you have a personal line of credit, the CUR concept also applies to that. So you can reduce your CUR, your credit utilization ratio, by paying off credit card debt, keeping credit card balances low or at zero, by being cautious when closing accounts. Do not close accounts, but when you close an account, what happens here is that you are reducing your amount of, let's say, available credit, and consequently, what will happen here is that this will affect your credit utilization ratio. So the bottom line, what I'm trying to say here is that you want to really look at that number very carefully. And sometimes you can consider a secured account. So you open a secured account, secured credit card, and keep a low outstanding balance, if at all. So this is kind of cool. So when you open, anytime you have a credit card open or a line of credit open, and you have a very low outstanding balance, this will have a positive effect on your CUR. Fantastic. Another thing you can do here is that when we talk about like lowering your credit utilization ratio, and again, I'm having a conversation with you about how to quickly rebuild credit if your FICO is messy. You can try to have a different combos of credit cards. See, the whole thing is a lot of folks get in trouble because they have no idea of the specific type of card they need. So you really need to, like when you close your eyes, I want you to tell me exactly what kind of card you need. And the thing is, the whole conversation will start from what kind of need are you trying to fulfill? Are you looking for a cashback credit card? Are you looking for, let's say, a balance transfer credit card? Are you looking for an intro APR credit card? Are you looking for a rewards credit card? A travel rewards, a hotel rewards? Are you looking for a card that allows you to earn cash back on grocery shopping? Or let's say when you actually you actually charge stuff at the gas station. So this is important. You need to crystallize your decision-making process to see what exactly actually is driving your card usage. The thing is, if you have a clear idea about the type of card that you need, you'll be in a better position to control your spending. You know why? Because anything you charge on the card fits with your lifestyle. So if you spend a lot of cash on groceries and you get a groceries credit card. I mean, a credit card that actually rewards you for using the card to purchase groceries. And the thing is that it is a win-win. It is a virtuous circle as opposed to a vicious circle, because when you charge stuff on the card, okay, let's say you have a $1,000 credit card, right? And using the card for groceries, and you charge, let's say, $800 on the card, and the card pays you 2% cash back. What will happen here is that once you hit your $800, you will be forced to actually pay down that balance, because next month you'll be using the same exact card to buy groceries, right? Kids have to eat, your husband has to eat, your wife has to eat, your grandparents have to eat. So those are routine purchases. So you will be forced, you'll be compelled to actually pay down the balance that you have. So this is what I was just talking about when I mentioned the phrase virtuous circle. Okay, and this is the kind of position you want to be in. The third thing you want to do here, if you want to quickly rebuild credit, if your FICO score is messy, you really want to check your credit score regularly. The key word here is regularly. Okay, by the way, I want to quickly remind you, boss, that I'm talking to you today about the 3 things you can do quickly if you want to rebuild credit. Now, let me talk to you about why it's really important to actually check your credit score. First of all, you want to check your credit report initially. Why? Because you need to know where you are starting from. Because people can tell you, hey, listen, your FICO is messy. Okay, well, when was the last time you tried? When was the last time you checked your credit score and report, boss? Because people walk around telling you, yeah, I know my FICO is messed up. But how messed up is your FICO? You got to have a clear idea, boss. You can't just be telling everybody, hey, listen, yeah, I'm around 500, I'm around 450, or I'm around 453. There ain't nothing like, approximate when it comes to credit scores. You got to be certain. You got to be specific, okay? You have to say, you know what? I am at 458 this month. Okay. At least we have a starting point. All right. So this is the kind of analysis I want you to get into, the kind of mindset I want you to get into. And once you know exactly how to where you start from, you can start taking actions to make sure you bring the score back up. Okay. And there are a lot of ways, a lot of free ways, by the way, where you can actually whereby you can check your credit report and score for free. So everybody knows a website called annualcreditreport.com. This is a website that allows you to once a year to see your credit report and score from all the 3 players, all the 3 credit reporting agencies. And this is something that Congress has mandated that those 3 agencies do. All right. So once a year, if you go to annualcreditreport.com, you can access your credit report from Equifax, Experian, and TransUnion, and for free. Now, if you want to actually check your credit report for free throughout the year, you're going to have to sign up with services such as Credit Karma, Nerd Wallet, Wallet Hub. We also have other players. We have I'm just kind of I'm blanking right now, but one thing I know is that a lot of credit card issuers, the big banks, Chase, Capital One, American Express, they allow you to also have your credit report, your credit score every single month. They show it on the card statement. Okay, so this is kind of cool. One thing I want to tell you here is that you need to make the monitoring of your credit report permanent. See, the thing is that a lot of folks, they start taking action when they get in trouble. Don't wait to get in trouble before taking action. So right now you're sitting there listening to me. You have a FICO score around 300 or the 300s or 400s or 500s. You're just sitting there and saying, you know what? I'm going to do this as a one-time thing. I'm going to fix it and I'm going to forget about it. No, boss. No. That will be the wrong posture to take. The thing is, when we talk about credit score monitoring, it has to become permanent. In other words, the same way you check your bank statement, the same way you want to see your bank balance or your investment. Some people check their investments every quarter. Some people check their investment every month. So for your credit score, you don't have to check your credit score, your credit reports as often as you check your investments. You got to check it more often. In other words, some people, our team members, we check our investments once a year because we are in it for the long haul. But for your credit report, you need to check this every 2 weeks. This is what we think. You can check it once a month, but every 2 weeks allows you to really catch up on everything. Okay, you can catch it at any derogatory items, people trying to play games, people trying to mess up with your FICO. You can catch it right then and there. You can nip it in the bud. If there's a little problem, you know that there is a problem, and it only takes 5 minutes. So I'm not trying to disturb your weekend routine and say, you can't play golf or whatever. You can actually have barbecue with the neighborhood pals. No. I'm just asking you to take 5 minutes. You take 5 minutes and you are able to actually know exactly what your FICO reports is, your credit score is. Okay, so do it at every 2 weeks so you know. And one thing I want to say here is that be careful with no credit. You need to understand that no credit actually engenders a hard pull, right? Anytime you apply for no credit, you have a hard pull. On top of that, it tells your existing lenders and credit card issuers that you are constantly on the run for no credit. And if you are constantly on the run for no credit, it can only mean two things: that you are living beyond your means, or you're not able to maintain a financial stability. Okay, which means that your CUR will go up, your credit utilization ratio will go up if you have taken a new credit card or line of credit, or your debt to income ratio will also go up if you have taken a new debt. And you don't want to be in either situation. Let me give you a quick overview before we close today's conversations here. And I just want to quickly remind you of today's topic. I'm talking to you about the 3 things you need to do right now to quickly rebuild credit if your FICO score is messy. The thing here is that when we talk about your FICO score, what is really influencing your credit scores? Because you got to have a clear idea, right? If you have no recollection of the things that matter when it comes to your FICO score, you're never going to be in a situation where you can rebuild credit. And I'm not talking about doing it as a one-time thing. See, the thing is, you need to have a formula. You need to have logic. You need to apply logic, what we call country logic, old school logic, things that have worked for the last millennium. I don't know if they had a FICO score back in the days in 200 years ago, 300 years ago. I don't think so, but you get my point. My point is that when you are trying to establish a routine, make sure that routine becomes a routine. In other words, it has to be inherently permanent. Okay, so what does affect your credit score? You have your payment history, you have your credit utilization ratio, you have your total debts. When we talk about payment history and credit utilization ratio, you have those two factors account for 65%. Right then and there, you have 2/3 of your FICO score, okay, that rely on what? Rely on those two elements. This is why I have said this time and again. My team has been telling all our viewers. Okay, some people say, well, sometimes you sound repetitive. Well, listen, I don't care. I don't care, because it's important. We need to let people know that those two elements, payment history and credit utilization ratio, are so important that people need to pay attention. 65%. Then you have your credit mix. In other words, the types of credit accounts you are using, the age of your credit, so how old your credit accounts are. Okay, hard inquiries also have an impact on your credit score. Public records, such as bankruptcies or civil judgments, also have an impact. So this is really important. And what I'm trying to say is that, how long does it take to rebuild credit? Well, there is no time, but rebuilding credit, one thing for sure, does not happen overnight. You know why? Because for your FICO to be messy, it didn't happen overnight. So don't listen to folks telling you can lose weight, you can lose 15 pounds in 1 week. You can actually gain 100 points on your FICO score in 1 month. That's like bullshit. I'm telling you, people are putting stuff on YouTube. It's crazy. Never believe somebody telling you can actually raise your FICO score by 100 points in 1 month. It never happens. It will never happen. It will never happen. Don't let people dazzle you, trying to waste your time and confuse you and give you false expectation. It will never happen. What will happen though is that when you take action consistently, when you think about having a plan, when you apply logic, when you actually have a blueprint to raise your FICO score over time, between 3 and 6 months, you will raise your FICO score. This is a lot more sustainable. Okay, this is more I would say specific than people trying to sell you, people telling you stories that you usually hear from snake oil salesmen. All right. Before I close to this conversation, let me just say this. It's very important if you are trying to maintain a high FICO score. So once you actually are able to quickly rebuild your credit, it's important now to maintain, right? You need to maintain. And so that's where we have to talk about budgeting and building an emergency fund. Okay, so when you find yourself with damaged credit, it's important to catch your breath and begin laying the foundation for a brighter financial future. So you got to think about, maybe you can think about having a budget, okay, having an emergency fund at your credit union or bank, okay. And there are other ways you can do also. You can become an authorized user. If you have someone in your family who has, let's say, an impeccable credit score or credit history in general, try to be their authorized user. Be an authorized user on one of their cards. Okay. One thing I want to say here is that it takes time to rebuild credit. I've said this before, and if I were to be honest with you, and this is based on the shoulders of our team members who have more than 40 years. We have more than we have been studying personal credit and business credit, for that matter, for the last 40 years. Okay. One thing I can tell you here is that it usually takes at least 1 year to recover from bad credit, assuming you do everything right. Okay. So please don't let, again, going back to what I said, don't let folks actually razzle dazzle you, telling you stories that you hear in Disney movies. Okay. People trying to tell you stories, wasting your time for nothing. And again, actually dangling in front of you false expectations. So give yourself 1 year and do the right thing. And before you know it, you will be very, very quick in the 700s, and you will stay there for a long time. And that's what I care about. I don't want your FICO score to do a yo-yo, trying to go from 700, going back to 400, and so on and so forth. No, I want you to go to 700 plus and stay there. Thank you so much for your attention. I really appreciate it. I was just giving you 3 quick things to rapidly rebuild credit if your FICO is messy. Number 1, pay your bills past and present. Think about your credit utilization ratio, number 2. And number 3, check your credit score regularly. Thank you. I will speak to you another time. But until then, remember, stay marvelous.